All right. We are back on the morning show. Ladies and gentlemen, I just want to say thank you from the bottom of my heart for all the support over the years. You guys are awesome. Keeps us going every single day. Your feedback and all the love you guys are giving us really helps us get the best guests in finance, as you guys are noticing. And today is no exception. We have FinTwit OG Stephen Place in the house from Investing with Options. Stephen Place has been around probably longer than me. I don't remember Stephen Place not being around. This is one tall dude, let me tell you. Every time I see him in person, I'm like, are you getting bigger or am I getting smaller? I don't even know. Listen, we got Bitcoin on the move. We got markets flying this morning. We got Steve Strazza in the house. Alfonso, Chartmaster Flex. We got Izzy on the ones and twos. Spencer Israel, new father, taking care of his baby. We're wishing him the best. Love you, Spencer. Hopefully you're back soon, but, do what you got to do. We got a lot to talk about. Izzy, hit it. All right, we are back, ladies and gentlemen. How was the weekend?
Mine was good. How's the beach? How's the weather over there?
Dude, I actually was not at the beach this weekend. I was back. I was back at the crib. We had a dance recital yesterday.
Yeah.
For the record, I was not the one dancing.
No.
In the recital. Nope.
My
daughter crushed it. No big deal.
But you're going back. What's the drive for you?
It's like 2 hours and change. It's not bad.
2 hours? Good beach drive.
The problem is we got to go through Philly. So, there's no going around it because you know how Philly's like in the armpit?
Yeah.
Philly is like the Genoa of the United States. In Italy, Genoa is like that armpit there. You got to go around to get the Cinque Terre and the whole thing.
Salami.
This is like first world problems when you're in the south of France and you're trying to get down to Tuscany. You got to go through Genoa. It's not the best part of Italy. Genoa is like the Bridgeport, Connecticut of Italy.
That's not nice.
I'm not trying to be nice. I'm just trying to tell you. I'm just trying to put some perspective here. So Philly's like that. So you got to go through Philly.
Bridgeport's got some flair. Bridgeport's got some character. It's not all that bad.
Yeah. Character. That's like when you introduce your friend to an unattractive girl. It's like, well, she's nice. At least she's so nice.
Yeah, it's fair. My weekend was pretty lazy, and I did start looking at some crypto charts yesterday.
Hey, now.
And I have my rally shades on because I think something's a brewing here. And really, what has me most excited is that I'm the kind of guy who prefers a shakeout with my breakout, right? I want a little shake before we get some. And that's exactly what you got with Bitcoin. Gave the bears a chance, broke down below that huge, polarity level at those former highs from last year, shook right back into that box and said, hooking higher, reclaiming VWAP from the pivot highs. I think it's blue skies and new all-time highs soon for Bitcoin.
How was it? How did Bitcoin do it? How was it? We got some good things to talk about. Why don't we do a little state of the markets and then we'll dive right in. What do you say?
Cool.
All right. All right, ladies and gentlemen, this morning we have not much happening in the equities market. We've got the Dow futures up a grand total of 44 points. That might as well be zero. 42,850 for the Dow. S&P's up 10 handles. So that's above 6,000. Barron's telling your parents' financial advisors over the weekend to now is the time to start worrying because the S&P 500 is at 6,000. So for all of you financial advisors with your office next to the Payless at the mini mall, if anybody walks in asking about mutual funds, you know what to tell them. Tell them it's time to start worrying is what Barron says. NASDAQ 100 futures also up 22 points. No big deal. 21,812. 30-year bond futures are flat, right at 112 even. Crude oil up 70 bips this morning, 65, making moves there in that crude oil. Copper oil up almost a full percent, pushing 490. Gold flat at 33.40. Silver up a full percent today, 36 and a half. Silver on the move, 14-year highs over the weekend with the VIX still at 17 and a half, still relatively elevated. Can't imagine what everybody's so scared about. Bitcoin this morning, big news, up 2%. That's $2,000. Bitcoin up this morning, 107,840, 107,840. You got ETH up as well, another 1.4% to the upside, 25.
Bitcoin chart, Fonz. Sorry.
Solana 155, up almost 2%. Total crypto market cap, Spencer Israel, if you're out there listening, 3.31 trillion. And of course, what stands out from this morning's futures? Why do I even bother asking? Of course, Strazza's already got the chart set up. Give it to me. Give it to me.
It's Bitcoin, because that level is on a closing basis. I have my resistance zone drawn super thick here from about 106 and a quarter all the way up to the intraday highs from back in January, 109 and change. Right. So if you draw a big, thick resistance zone there, we're breaking through the beginning of it. And I think you can confirm that breakout against 108, 108 and a half, 109-ish, right? But we're already taking back that VWAP from the all-time highs from just back in May. So there's really nothing more. There's nothing more. This is just a classic bull flag. If you look at it, you have a huge ramp up. That's your flagpole coming off of the April lows. And then this little corrective wave, that's your bull flag. You can measure that out. Man, if you were to measure that out, JC, what is it? You got to tack on $30 to this. What's the flagpole? 30? So where's that put us? Almost 140? Measure that move out? I don't know. You like it? 140? I'm hearing 150 from you.
Yeah, 155.
There you go.
Yeah, 155, and then 240 after that, for those keeping score at home.
So we would agree that the price target for Bitcoin is higher.
Listen, I don't mean to talk in my book as somebody who's irresponsibly long Bitcoin. Let's pretend I don't own any at all.
Yeah.
We got back to those late 24 highs, early 2025 highs. We got back there for the first time in 6 months, let's call it, right? And we couldn't get above that level. And why could we not get above that level? Because we know for a fact there are more sellers than buyers. There's more supply than demand for Bitcoin at that price. Facts only. Facts only. And so what we just saw over the last few weeks was the market reiterating that, yes, in fact, there are still more sellers than buyers at those prices. There is still more supply than demand. And therefore, prices have not been able to continue higher. So prices making new highs will be evidence to us that finally the demand has been able to absorb all of that overhead supply that has been in place at those prices for 6 months. And so when you see these in 113, 114, 115, that really suggests that the buyers are in control. They could be getting there. Not there quite yet. Still got some work to do, but I'm not going to disagree with you, Strazza. I think you're spot on. Irresponsibly long or not?
That was a great answer. That was a great answer. Next question.
Shoot.
Are you interested at all in playing some sort of crypto upleg via our old friend, Ethereum? Because I see a bull flag in Ethereum. I see it's been a big, big laggard. I see a little Mo spike in the Ethereum Bitcoin ratio. Is it too cute?
The Mo spike from early May is what you're saying?
Mm-hmm. Off the lows. Yeah. Little Mo.
Yeah.
Big, like 10-day rate of change basis, JC, it's 4-year. So definitely starting line momentum.
Why don't we throw that up quick there?
Can you run it with the 10-day?
Throw up the new slide 2. Excuse me, slide 3 there, Spencer. Izzy.
A little Harvey Danger reference. Shout out 90s rock.
There it is. There's the ETH BTC ratio, and that's that momentum thrust there that Strazza is alluding to. And then since then, classic wave 2 correction there for you Ellioticians out there. Classic wave 2 right there. For those of us with CMT, Chartered Market Technician status, we are familiar with such things. Not everybody is a CMT charter holder, of course. But those of you who are and have that body of knowledge understand what I'm referring to. There, that classic wave 2, right, Steve Strazza?
I'm not a charter holder, sir.
Oh, I am fully aware. That's why I was just breaking your balls about it.
Oh
in
yeah,
case you didn't catch that, you saw
wouldn't
catch his
know
phrase.
for reasons like this.
Boom. No, I mean, listen, I'm not Mr. Count 1 wave, 2 waves, 3 waves. I'm not that guy, but I mean, it's pretty, it's there, right? I don't know what you want me
Yeah,
to tell you. All right, let's pivot hard. Hard pivot over the weekend. Barron's telling your parents' financial advisors down at the
oh yeah.
mini mall next door to the Payless that
Unpack this.
the S&P 500 is now at 6,000, and now is the time to start worrying.
Hold on. So I was planning to ask you about this. Unpack this situation at the Payless shoes with the mall advisor? That's your parents' advisor. Who?
Not
How?
my parents' advisors, your
I've
parents'
never
advisors.
seen a financial advisor at a mall. Come on, they don't
Dude,
have
they're
that in
there, man. They're
Bridgeport.
there.
You,
They're there.
you
They're
won't see that
sitting.
in Bridgeport.
No, they're sitting there waiting for people to walk in, asking about mutual funds. I'm telling
It's
you.
right, the wedge between the Payless shoes and the barber shop.
That's right. That's
Okay,
right.
all right. I gotta look. I'll
That's,
look harder next. I haven't been at a mall, and man, it's been good. I,
no, you got your Dominican barber right there shaping the guys up, and then you got the financial advisor, and then you got the pay
so
less, and then you got
what?
the food court,
What is it? What is the classic mall barber? Oh fuck,
And then
Spencer
there's
with
like a
sports
DMV in
cuts.
the corner there, and maybe if you're lucky, you get a wing stop. Maybe I don't know. Maybe if you're
No,
lucky,
no, they don't have that in
little
Bridgeport.
lemon pepper. How you doing?
You get a little Panda Express, and that's it.
All
Sbarro,
right,
and
little
you're
Panda
happy.
Express. I'm not gonna hate on Panda Express. I'm not gonna hate on it.
Rachel says, "What's Payless?" It is a department store that sells shoes. That is a staple in many malls. Many
Dude, you
malls.
know what they did? You know what these dude, shout out Payless. Shout out Payless. You know what Payless did? They created
That
like
is,
this soup.
yeah,
They create you gotta find we gotta find the video. If somebody Izzy or Fonz out there can dig it up and drop the link in the chat. They did like a bit where they created like this super fancy, high-end, like boutique, right? And they
uh,
called it like P Finance. Like there was like a play on words where like it was Payless, and they invited like
yeah,
all these like bougie fashion people, right? And they had all the shoes in the store were only Payless shoes, but they marked them up into like $800, $1,500, and they were interviewing the people. They're like, "Oh, this is high quality," and blah 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 blah. These are like super like with like accents, like super like fancy people. And
yeah.
dude, and then they were just told, "Yeah, by the way, this costs $12 to pay less." They're like, "No, no way." Dude, it's such a good video.
That's
Go
pretty good.
find that. Go find that link. So shout out to Payless. I'm not
All,
hating on Payless.
all the
I'm hating.
financial
I'm hating on
advisors
the financial advisory in the mini mall next to the
got it,
DMV. That's who I'm hating on. Not hating on
and
Payless. Shout out Payless.
but hold on, those are the people who are reading the Barons.
Your parents' financial
Got
advisors,
it,
right?
got it.
The financial advisors who need financial advice, right?
And
Nothing worse than a broke financial advisor. You can't have that.
and why do you think they want them to be worried?
Because when you're in the business of making noise,
Yeah,
you go to work and you make noise. Like,
yeah,
there's a lot of media outlets out there, not to pick on newspapers. You could pick on basic cable, whatever. It's just
yeah,
what it is. Like they're not in the business of helping people make money. They're in the business of distracting investors from what's important so that
yeah,
they consume their content so they could sell advertising for penis pills and insurance
yeah.
companies and whatever. You know how that goes.
Yep. Penis pill's really
There
hot
it
right now.
is. Pay
So
less commercial. Is that it? Did we find it?
so
This is
so look,
it. This is it. There it is. Good job, whoever found that. Big shot out there. The Payless
is
experiment. Nice. Good
so
job, guys.
yeah.
Nice. So good. So, guys, click on that link and give that a watch. Not right now because we have more important things to talk about. But when you get a free chance, maybe a little lunchtime, maybe a little, late night video humor, highly encourage you to watch it. Shout out Payless, dude. Shout out.
So speaking of basic cable,
Hold on. Can we get
okay,
back to this? Like,
yeah.
seriously. Like, is Barron's really telling your parents' financial advisors to start worrying?
You know, they're still one of the better ones in my
I
opinion.
like what they did there with Uncle Warren there with the mirrors. That's cool.
It's ironic because I think I still read my Barons using your account each weekend. At least somebody's using it. I just look through. Like I'm not reading these articles, but like I take a peek. I think I've been using your account for like 5 years too.
I'm only interested when I get quoted.
Right.
When I get
Right.
quoted in
Yeah.
Barron's, they're doing a good job there, those Barron's folks. But when you say dumb shit like this, you're gonna get abused.
Yeah. Now, interesting cover. Also, why are we still talking about Berkshire Wasn't that like last month?
Uh,
In Yep.
well, it takes them a month to write the article, and then they have to go in for approval. It's like a whole thing. You know how these journalist people work. They're not in any urgency to inform their audience.
So this is interesting here this morning. Robinhood's getting burned on a downgrade, which you haven't seen much of for this stock during this run, right? Analysts have been absolutely chasing this name, so behind on it. It's been one of those hot stocks. And I don't know who the hell Redburn is, but Redburn has Robinhood down pre-market on their note, despite the strength in crypto. So that's interesting. Robinhood, you would expect to be up pre-market this morning. And the other news that stood out to
Around two
me,
points, not a big deal.
still, but it should be up, right? It should be moving with the cryptos. And then the other piece of news that stood out to me, only because I'm a big HBO guy. I'm a big fan. We spend a lot of
You are.
time on Max. I just love what HBO has done over the year. By far the best in breed when it comes to TV. Nobody's ever done it like HBO. They're spinning off Warner Bros. So they're putting the streaming stuff on one side. This is what cable companies do. Every couple of years they spin off, then they merge again, then they spin off, then they merge again, then they spin off. So for now, Warner Bros. Spinning off like their sports networks and the cable stuff versus the streaming, so you can get a purer play on HBO Max and whatever other streaming brands they have. They have a couple. Pretty cool.
I
Pretty
want to give
cool.
a big shout out. We break balls around here. We like to have fun, but I want to give credit where credit is due. One, Ari Wald, currently, in my humble opinion, one of the best technical analysts on the planet today. Shout out Ari Wald, friend of the show, obviously. His quote over the weekend: "Our best ideas occur when what we expect to happen overlaps with what is happening." Oh,
He's talking about anticipating. Mhm,
dude, come
mhm,
on.
mhm.
Our best ideas occur when what we expect to happen overlaps with what is happening. Man, that resonated with me, Strazza.
I like it. Now, he's so quotacious, that Ari Wald.
Dude, that was so spot on. And when you think about it, it's like, yeah, common sense. Yeah, duh, right? Yeah. But we don't talk this way. We don't think this way, but that is so spot on. Shout out Ari Wald. It was so inspiring to me. I went out there and I created my own Venn diagram. Full disclosure, I did not know how to spell Venn diagram until this weekend, but
Two
like
ends.
I knew what it was. I just didn't
Mhm,
know how to spell Venn diagram. As it turns out,
mhm.
Venn is VENN. Did you know that,
Yeah,
Joseph?
I did
Oh,
know
you
that.
knew that.
Mhm.
I guess I
You
must have
know.
skipped that in school.
Yes.
Do you know what Venn diagram? Why it's called that?
I'm sure that the person who probably invented it is probably a statistician, and I'll bet his last name was Venn.
You are good at this, Strazza. Listen, don't listen to what people say about you. You are one smart cookie. Let me
I
tell
like.
you.
Hey, I had fun in college.
All right,
You
what's
know,
the over under? What's the over under
I, s-
on when this occurred?
I studied hard, JC. I
When
don't
what
know.
what year? What year?
Late. It would have been in the early 1900s.
All right, close, close. You're good at this, Strazzer. You're good at this. Was 1880s.
Oh,
This
I
was
was
back
gonna
in the
say late
Charlie Dow
18.
era.
All right. Okay. Good.
So
Yeah.
anyway, I took this and it inspired me to create my first Venn diagram. I've never created a
Well,
Venn diagram before in my life. Can you show my
yeah.
art work here,
And
please?
JC, what a great visual a Venn diagram
I
is.
know, I
You
know.
know, simple,
Yeah,
simple, so clean, just perfect.
I just want to give a shout out to a
I
one
love.
John Venn. John Venn is his name.
I love a
Can you
good
please throw
visual.
up the artwork that I did? I spent so much time on this. I spent all of 3 minutes putting this together. I thought I did a great job. I'm not thrilled about the color choices.
Let me see. Let me see. Let me
Not
see.
thrilled about the color choices there.
Oh,
But what do you think?
yes. It's
Not
the
bad.
quote. It's the quote in a Venn diagram. Did you send it to Ari and did he like
You
it?
know,
And why
I have not sent it to Ari.
and why is it Easter colors?
Because I looked up an app to find how to make a Venn diagram, and
Oh,
you needed like to have an account. And I was like, yeah, I could just do my own. I just used the same colors. In hindsight, I should have done like a forest green and a light green, and then
yeah.
like a candlestick green in the middle, like to keep it real. You know what I'm saying?
Yeah.
I
Okay.
didn't do that. I went with like baby colors, because that's what was the default on the app that I didn't want to pay for.
In the textbooks back in the day, they would just be different shades of gray.
Oh, is that how it works? Because they didn't
Yeah.
have color printers yet.
No. So Apple TV is coming on. You're right. And I've checked out Stick because I'll watch anything that's about golf. That's a new little comedy show with Owen Wilson about golf. And I really enjoyed The Studio with Seth Rogen. Did you watch that, JC? You'd like that. That's
I
an
don't watch
easy one.
anything. How many times do I need to tell you, bro?
It's a chill watch. They're like 30, 40-minute episodes.
Hold on. Can
You
you
got the
throw up
rope.
slide 9? Stop changing the subject. This is really
Okay.
important. This is really important. This was
Oh,
right up your alley. Basically,
oh,
I stole your chart
you like this?
here, and I added some Ari Wald flair to your chart, right? So this is what we call, folks, this is collaboration. Steve Strazza throws out a chart, Ari Wald dropping some knowledge, and then JC coming in
What a
hot, just
team.
bringing it all together, right?
Whew.
So here we have the ARK Innovation ETF, highest short interest ever, highest short interest ever. And of course, we expected a bullish continuation pattern for many, many, many reasons.
Right.
The all-time high short interest being one of them, but for many other reasons as well. And then, as it turns out, Steve Strazza, as you pointed out, that is actually what is happening also. So not only what we expect to happen, it is what is happening. So to quote the great Ari Wald, our best ideas occur when what we expect to happen overlaps with what is happening. Tell me that ARC innovation is not exactly that.
Yep. And this is why, JC, because we were anticipating it's what you have to do with these coils if you really want to get a good entry and have a clean trade out of it. We've been just loading up on ARC calls, right? Anticipating this resolution because all the evidence continues to suggest when you look around, right, JC, at other equities or the strongest areas of even US equities markets, similar coils have already resolved higher. So this is another one of those things where it's like, oh, if Europe's doing it, if Japan's doing it, if this is doing it, if Bitcoin's doing it, these these areas of the US equities market that are all coiled up in bull flags, they're probably going to break higher too. Commodities. How about commodities?
Um,
God.
so sticking with the ARC, I love how you just keep trying to change the subject here. It's like almost like you don't want to talk about the stocks you've been pounding the table on and are correct. Speaking of which, Archer Aviation, one of those names. Chat keeps wanting us to take a victory lap. This is it. This is the victory lap. But it's less about the victory lap on Archer Aviation up 12,
It's up
13%.
for one day. What are you talking about? Archer hasn't been a good one. Oh, it's up this morning.
Yeah,
Big
it's up
pre-market.
13% today. But the
12
point
and a
is,
half percent.
hold on.
Yeah.
Archer Aviation, part of that ARC complex, right? So part of that ARC
Definitely.
complex, along with the crypto stuff, Coinbase, and all of those types of names, high speculative growth. Strazza, any thoughts there?
Yeah, well, Trump loves his executive orders, so you always want to be careful with these kinds of moves. It'll be interesting to see if it sticks, but this was from some sort of executive order called drone dominance that was signed on Friday. So this is great. You know, Stellantis and Toyota just keep pouring cash into the pockets of these two companies, Joby and Archer. And if there's ever been a signal that there's something there, it would be the fact that these major auto manufacturers are so willing to just pour in hundreds of millions of dollars to fund these EV toll situations. But it seems very, very legit at this point. Now the government's trying to figure out how to regulate it and get us moving. And if you look at other countries who are more advanced or maybe have looser regulations for these things, they're already doing it out in China and I believe in Saudi Arabia. Pretty
All right,
cool.
guys, listen, I got to hop early today. I appreciate you guys being here. We got Stephen Place in the house. Sean's in the house. I can't wait to listen to the conversation between Sean and Stephen Place. Steve Strazza in the house. We got Kenny. Bring on Kenny. Appreciate you, Strazza. Keep up the good work. Strazza crushing it. We break balls around here, but Strazza doing a great job. Well done, sir.
Later, Jason.
It's been a long time coming. They ain't come for my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Hey.
Hey, what's
How
up,
was
man?
Where
What's
were you? Bermuda, Aruba? Where were you?
Bermuda, Behuva. Yeah, Bermuda.
Ooh, I wanna do ya.
Yeah. You ever been?
No. How was it? I've heard
Oh,
lovely things.
it is nice. Do you know there's only 64,000 people in the entire country?
That's so good.
It's so
Tough to beat.
bizarre. Yeah. As we were traveling, every taxi driver knew each other. I'm like, do you guys all know each other? He's like, not only we're all family, actually. We're all related
Awesome.
somehow.
Yeah. The
So,
island life.
yeah.
Beaches were good. Weather was good.
Yeah, we played golf, me and the boy. So I got my first birdie. So that was my trip right there.
Did you?
Bang, mic drop, my
Oh,
first birdie. Yeah, on a par four.
nice.
Yeah,
Awesome.
it was a real
But
one too.
he still whooped you though. Kid whooped you.
Yeah. He knows
Yep.
how to putt. I got to figure that stuff out.
Dude, putting sucks and it's so boring. So it's the hardest part of the game to practice because who has fun practicing fucking putting?
Yeah. So I actually started doing lefty versus righty. I feel like
Oh no, you were changing grip mid round, Kenny?
I go
Oh,
lefty now. I feel like lefty. I have to concentrate more. I don't know anything to help.
that's
But there
funny.
was nothing to do there. So if you're looking for an escape, there wasn't a wakeboard, a jet ski. There wasn't even a kayak anywhere. It was basically either you played golf or you just sat there and you just stared into the sun. Yeah, that was it.
Forces you to relax though.
It really did. Yeah.
Yeah.
But it
So
looks like I didn't miss anything, right? Sometimes the market gets volatile when I leave. It looks like it just went up every day. You had one burst of volatility, and then that was it.
yeah, it was a lot more of the same last week. Trying to think, we had these nice little coils that set up, and through the end of the week, you started to see a lot of them resolve. The ARC stuff, the speculative stuff is working. And I was thinking of you because we had some sketchy name that I know is right up your alley.
Oh,
It popped up hot corner insider buying after this move. SBET. I think this is one of
oh
those
yeah. I saw that
sports
one
gamers.
going nuts before I left.
Look at that thing. I
Yeah.
mean, what was this? It was up 430%, Kenny, on a Tuesday a week and a half ago.
Yeah. I don't know. There's one of. You know what? Speaking of betting, I'm waiting for SRAD to blow up. So come on, baby. I've been in the
Still in
stock
there?
for like 3 weeks now. It's moved 20 cents. So
No, but that coil, that is a pretty looking coil.
I do like SRAD. Yeah, I've been buying as part of this consolidation, and that's what I wanted to talk to you guys about today. So as the resident bear here, there's nothing to be bearish. Everybody thinks this consolidation, any pause, any little pullback, that's it. The bull market's over. These are
Right.
consolidation moments, and we're going to go higher. There's nowhere else to go. We've power gapped. We've had two mini gaps, and then that monster power gap in the beginning of May. We're still on the other side of that gap. That gap trapped everybody wanting. The shorts want to cover on all pullbacks, and the buyers that were lazy and didn't want a dollar cost average or just get involved, they want to get involved now. So everybody's buying. It's virtually impossible for us to go down now. So it's enjoy it.
New all-time highs in the queues by the end of the week.
Yeah, probably.
Right?
Where are we? 12 or 13 points away. And if you think about it, if you tack on another 10% here, that's 53 points. Welcome to the 600s. It's right there. I mean, it really is right there.
Here's a good question for you. Chat wants to know. You don't trade when you're on vacation. A week like last week, you're just hanging out. You're not opening up your laptop and going crazy from 9:30 to 10:30 before the beach, are you?
I looked to see that IPO because I was like, I'm
Circle?
on a, I don't know how I got involved in some sort of WhatsApp, Discord chat, recommendation, right? So
Sounds sketchy.
I see
Yeah.
the IPO come up as a recommendation. I'm like, oh, so you're going to get it for me for $37? I'm in. Where do I send the money? I was like, what do I? So then I typed back, and all right, it opened up at 90. What do I do? Oh, we still like it. I'm like, do you? All right, great. You're the best. So do I. It'll probably go to 120. And next thing you know, it's close to 120.
To be clear, you did not get shares, right?
No, I did not get shares.
I think ARC got shares, and that's why there was such a big pop in it. Is that true? I heard that.
Yeah, it sounds like
on
she
that.
was buying, at in the open market too. So, I mean, again, this market, I'm kind of disappointed with this Ryan Reynolds IPO that I bought, Mountain MNTN. It had a good couple of days. I figured in this market with a handsome devil like that at the reins, I thought the stock would be $300 by now. But CoreWeave, just unbelievable. And
I wasn't expecting that. And I think
Yeah.
that bodes really well for like the whole AI theme though, more broadly. Like that's a big one. To be
Yeah.
working like this, what's that say about AI?
Right. And what I like most about CoreWeave is that people are still coming out calling this company worthless. I'm like, yes,
That's funny.
yes, keep saying that, CoreWeave. Well, this one guy who's on, he really made a lot of valid points. He was talking about how this company wouldn't exist without NVIDIA and Microsoft just basically feeding them their business. I'm like, but that's how it works. And it is working apparently. So why not just buy the stock? This company's not worth 70. I'm like, is the stock $125? Then that's what it's worth. You can't fight it. And that's the hard part about being a bear. oh, just because the stock went from 35 to 140 and you're pissed you didn't buy it doesn't make it bearish. That makes it more bullish. It's going to 180 and 250. So let's
You
just
know, imagine being one of these fundamental people. They spend their days racking their brains about what a stock is worth, what its value is. It's
yeah,
fucking right in front of your face on the screen.
right. That's why this is my boy right here. That's the only thing he's learning.
Charts.
He knows
Listen
nothing
to
about
Dad.
fundamentals. It's nothing. Nothing will make sense ever again. Anything you've read in a book, they got to start rewriting books
Oh
because
no.
I mean, try to put valuations on it like the old days, where the E actually means something. Earnings per share. There are no earnings on half these stocks, and it doesn't matter. And it's fantastic. So
And
trading's been
we
great.
are back to one of those environments where the non-profitable, highly speculative, super long duration equity plays, right? Where you got to go way out, like the companies that they're valuing on 2030 and 2035 earnings, like
Right.
they're working again. It's like
Yeah.
getting
Yeah.
back to 2020 already.
That's why I know you like this SRAD. I don't mind owning a stock like that because it's like a
Right.
throwback. Hey, it's only up 10% for the month. What the
Yeah.
hell is this? This is bullshit. Like I'm complaining it's up, and it's because it's not up enough. It's just ridiculous.
It's been that kind of market. It's getting harder and harder to miss. Have you been watching the quantum stuff? I mean, again this morning with the Ion Q.
Yeah.
Um,
But I do have a little closet play. Mob is a drone stock that not too many people know about. So if it wakes up,
Mob,
it tends to get squeezed. Yeah, Mob. Join the
cool
mob.
ticker.
MOB. It's
MOB.
it's in the drone sector. So when the drones start moving, this thing tends to get on board. And there's another one. There was UMAC. Probably that one's moving. I'm sure. I know you got the Joby and the Archer, and then
Yeah.
sometimes RR comes along for the ride. It's a robotic stock. So going back to the ones that were hot, back then. And I know you guys you like the Bullfrog, the AI, not the Bullfrog, the
Big
BBAI.
Bear. The Big Bear.
Yeah, that one's been doing good. And a
There's
little
a
tiny one,
Bullfrog too.
even more lesser known, was a stock called SID-U. Sometimes wakes up when the
Yeah.
drone stocks start moving. But I like the mob.
You traded that one. Didn't you trade a big move in that one, like at the beginning of the year? Yeah, you did.
Yeah, I mean, all these stocks they've had their pumps and their dumps, but that's what's great about some of these. When they come back, that's when you know they're not as pump and dumpy as you thought, and that's what the quantum stocks are doing right now. So all of them are back, and they're all consolidating at higher levels, look like they want to go higher too. So just not you don't want to be bearish this market. I mean, you can't even find pockets of bearishness. It's unbelievable. Maybe some of the oil stocks, maybe like a cliff. Like that one, I was expecting that stock to do some wonderful things this year, and that stock stinks.
Dude,
So if
even
you got a
those,
stock right now, it's not participating in this rally. It's just like you should just get out of it.
but even those, like I think you'd be crazy to go short a stock like Cliffs here.
Oh yeah,
Point.
you can't.
These commodities are starting to work left and right.
Yeah. So
This
while
base in Mob, though, hold on. This is a drone one, like similar to Joby and Archer, because there was some sort of executive order, I think, on Friday that was signed. They called it drone dominance.
okay,
So that's hot, right? That's a hot headline.
man,
They know what they're doing over there in the
okay.
Oval Office.
Join
So
the mob. Join the mob. ASTS also finally cracking back into the 30s. That looks hot. Finally, get out of here.
we've
That thing's
taken so many shots at this consolidation. This thing has juked us out so many times. I hope it's finally going.
right. I know you've been a fan of silver, so I'm excited. I've been, I buy real silver. I've been just buying the sheets, but finally, we are at 12-year highs right now. So I think we're going to catch up. We got another 10% to go to catch up just to the gold move.
Gold's up
So
30-something% this year. Silver hasn't done nearly as much, and that's
right.
your path, right? If you want to know where silver could go, pull up a chart of gold.
Yep.
And then the weird ones are starting to work too, like platinum and palladium. I can't tell you the last time people were talking to me about platinum. That's happening again.
I know the last time we're talking about palladium was a club in the city.
Yeah, right.
Let's go.
Nice. All right, good
Yeah,
stuff.
it's just hard to be bearish right now. But listen, when I see the signs, you guys will be the first to know. All right.
All right, Kenny, good to be home, back in his office. He'll be here all week. We'll see you tomorrow, Kenny.
Yeah, we got a lot to talk about. All right, man. Be good. Good luck.
Thanks, brother. Here he is.
Hey,
From
wow.
one wild trader to another. I heard we got Stephen Place.
Wow, I wasn't expecting
Gotta
that
be
pop
great.
in. That's great. Hey, but I wanted to, Kenny was saying he couldn't find pockets of weakness anywhere. I will submit to Kenny, if you're still listening, Kenny, home builders. We've
Oh,
been trying to catch a
ooh.
turn in that thing, and they still keep going down. I'm talking my book. I'm short KB Home. That thing is there's not finding it. It doesn't seem to want to bounce at all. Toll Brothers, NVR, Lennar. I mean, maybe they're going to turn here, but we've been waiting for that, and it hasn't happened. So I'm not
I
saying
hear
you need
you,
to be
Sean.
bearish, but
I hear
there's
you.
your pocket of bearishness, Kenny.
Standing out more and more as other things play catch up and start working. So if you get a broad market downturn here, I think home builders get rocked. However, if you don't, and we keep grinding towards new all-time highs, dude, it's only a matter of time until they start to look more like the others. I would be
Well,
shocked.
you hit it on the head. That's why I remain short some of these home builders, not because I'm particularly bearish home builders, but
Good
as a
hedge.
portfolio hedge. If we get a
Yeah,
rollover in the market, I want
great
to
hedge.
be short something that's going to help out because
I like it.
I have a lot of long exposure.
You know how I feel about these charts. I'm like, when they finally pick a direction, I just want to be involved. And it's been a frustrating trade because we've been coiled up here for a while,
Yeah.
while everything else has been working. All right, why don't we bring Stephen Place on? I'll let you
Bring
guys
him
vibe
on.
about options, and then we could chat a little after.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
There he is, the best dressed man in New Orleans, Stephen Place.
Good morning, my friend.
How are you?
I'm good. I'm doing really well.
It was great hanging out with you a few weeks ago.
Yeah, that was a blast. For those of you that don't know, we had a little get together in New Orleans. And one of the biggest takeaways, we always talk about how there's like this knowledge gap between retail and institutions that doesn't really exist anymore. And the idea flow that we got, and it was just incredible.
Well, I hate to go down the path of being the old man in the room, Stephen, but we could talk a little bit about how when you and I both started, there was no online communities. There was very few bloggers. There was very few ways for the retail investor to get really good quality education. You and I kind of came from the world where we had to teach ourselves. We had to learn it ourselves. And the traders these days have so many more tools. You have to wade through some shit, of course, right? There's a lot of bad stuff out there, but there's so much good stuff out there that I feel like retail traders today have the chance at a much bigger head start than you and I had.
Yeah, I mean, the way I learned, it wasn't books. It was spending thousands of hours on Thinkorswim's Analyze tab, and that was it. It was just like trading through the gauntlet, saying, okay, here's why this didn't work. Here's why this did. Here's why I shouldn't go short vol anymore on these stocks. And here's when, we should just go buy some out of the money calls and let it rip.
And for those who don't understand what Steve is saying when he says playing on the Thinkorswim Analyze tab, for us options nerds, that's basically putting together various spreads, seeing the P&L graphs, see how you make money, where you make money, and just playing around with that until your eyes bleed, figuring out the scenarios that you can create for yourself to make money.
Yeah, exactly.
Well, Steve, I want to ask you a really basic question because I get this question all the time. I think I run a traders meetup group in Colorado, and we get newbies all the time. And once they find out I'm an options trader, one of the very first questions I ever get is, "What's your favorite options strategy? What's your favorite trade?" So my question to you, Steve, is if you could only do one trade ever again for the rest of your life over and over again in the options world, what trade would that be?
So it's called the desert island trading strategy for me. Like if you could be on a desert island and you had one trade to take with you, what would you do? And we actually have deserted islands around the corner where I live. We still have Wi-Fi and cellular connection, and you just take a boat and a margarita machine with you. It's not like you're not building a hut or anything. But when you drill down into it, it's a very good question to ask, and you say, okay, what's the least stressful, simplest, most straightforward way to have a consistent strategy going forward? And for me, it's selling credit spreads, specifically going about 2 to 3 weeks out, looking at about 20 delta on the short strike, and selling those spreads. Now, I do have some twists on it. I don't sell in high vol markets. I don't sell in downtrends. I don't want to get too much in the weeds here, but A credit spread's known as a vertical spread, where you buy an option, you sell an option. The only difference is a strike price. And a lot of people try and do credit spreads thinking that they're going to get time decay or they're going to capture some kind of volatility arbitrage. It really comes down to market timing. And so the least stressful thing is actually to sell credit spreads in an uptrending stock, because the primary mover is delta. Like we can go over all the Greeks. I literally wrote the book on option Greeks, but market timing matters a lot for retail traders. You're not going to be buying straddles or selling straddles as a retail mostly. And so volatility is like it's not the biggest consideration.
Right. So if I'm hearing you right, you're selling.
Try
If
and
I'm hearing
find
you
a
right,
way
you're saying that
to-
you're selling put spreads.
Yeah, everyone tries to manage, tries to find the perfect option strategy that works in all market conditions, that allows you to have your cake and eat it too. It doesn't really exist. And so you still need some kind of a market timing mechanism involved, especially if you're doing directional trading.
Well, Stephen, I'm surprised. I'm actually surprised to hear you say this, because I do recall me and Steve Strazza had you on our Off the Charts podcast a while back, and I remember you talking about how premium selling burned you out, completely stressed you out. So there's a shift here, and it sounds like maybe the shift has been more about making these directional trades than just trying to be a premium seller. Right.
So what'll happen is that you'll get a pullback in the market, and then implied volatility will tick up. And then you say, oh, this is a great time to step in front of the freight train. Right. and so what happens is you sell those spreads, and then the market gets killed. And then you either stop out of the trade, which is a really good idea to do with credit spreads, or you're an idiot and you take it to max loss, and then your expectancy goes negative on your entire system. So it's easier to just not, if we're going to pick up pennies in front of a steamroller, we want the steamroller to be going the other way, right? We don't want it coming at us. And so it's a lot simpler and more straightforward to sell spreads into a trend versus against a trend. Now, are there extreme situations where it makes sense? Yes. But what I've found, when we have pinless hand grenade action in the markets, I learned my lesson in the tech wreck of 2018, right? And when we hit COVID, I wasn't selling a single spread, not selling a single option. I was on the net long side, because the market moves faster than what the options price in a very volatile market. The same was true during the tariff tantrum, right? If you tried to start selling options into that move saying, oh, the VIX is high, then I should sell spreads, you took a shit ton of heat. Right? Versus, hey, you wait a month, let's just say the market gets above a moving average, then you sell those spreads, you're going to have a better system expectancy than trying to catch the knife.
No, I agree at 100%. And we talk a lot around here about, the guys get excited about when stocks are down and volatility is up. They want to sell puts and catch the turn. And I'm like, hey, that's great, but slow your roll. Let's let the stock bounce first. Let's let volatility roll over, and then let's talk about selling puts. Let's not be selling puts as volatility is rising. I know, yeah, you see that high volatility, and it's a very sexy thing. Like, oh, look at the premium in these puts. But no, you don't want to try to catch the bottom. You want to wait for the turn to happen first, and then there'll be a lot of tailwind in your favor once the volatility actually has rolled over and starts going back down.
And what tends to happen in the vol markets is that after some kind of an ugly event, the risk premium still sticks around, right? We've got a VIX. What's VIX trading at? 19 or so, right? Where are we at? Yep. 17. VIX futures are trading at 19, 20. The actual volatility in the market seems to be heading towards 12. There's still a lot of juice to squeeze out, and you have a lot less headaches right now than you did in April trying to absolutely nail a trade. Yep. Especially if you're selling spreads, you're not getting a lot of vega. You're not getting a lot of sensitivity to the movement and implied volatility anyways. So the primary consideration is your delta. Like, if you were to sell a spread, and let's just say a put spread, that's a bullish spread. That's the desert island trading strategy. It's just buying in uptrends. if you were to sell a spread, it's a very leveraged position. If you look at the delta relative to the capital required on it, it's a ton of leverage. Would you be comfortable buying the stock right there? Is the first question you should be asking. It's not, do I think implied volatility is high enough, or do I think I have enough cushion to the downside? Because as soon as you say, I don't think the stock is going to trade down to $50, so I'm going to sell a put spread there or sell a put there, the market gods will descend upon you and the stock will trade to 50. And then you're like, well, shit, what do I do now? Right? And so market timing matters the most with most option strategies. Are there some advanced witchcraft things? Absolutely. I trade those too. What was so CoreWeave ran, but there was also the news with the ticker starts with an A, but there was a second runner, and the volatility market can get really goofy where you actually can buy the put on the weekly options and then you sell out of the money puts on monthlies. And it's actually a really good trade, right? But I could spend 30 minutes explaining it. Most people are still not going to understand what the hell's going on with it, which is why I have an edge, right? But for the most part, desert island strategy, sell put spreads and uptrends.
Now, I like it, and I have a similar strategy, but the opposite side of the option spectrum, meaning my desert island trade is I like to buy calls and stocks making all-time highs. If that's the only trade I could ever do for the rest of my life, that's what I would like to do, because I like to have the defined risk and the convexity if I get it right.
Yeah. And so if you look at the option skew, normally people are scared about the downside and they're not scared about the upside. So implied volatility will be higher on the puts and it tends to be very low on the calls. And everyone and their mother's trading 0 DTEs and weeklies. And there is it's an incredible edge. You go 3 to 6 months out, you buy a 30 delta option because those tend to not price in and capture upside drift and convexity. And so a lot of these names, you can buy some really cheap options and you get a better system expectancy than you would have buying the stock straight up. And then you have extra cash on the side. And if you want to try and hedge, then you can do it versus tying up all your capital into a single stock.
And I mean, you hit on a point there with all the volume that's coming in with the shortest dated options available, right? Whether it's a 0 DTE or a 1 DTE or a weekly DTE. I think I saw a stat just recently that in May, something like 60% of options volume was in short dated options, less than a week to expiration. So being that as it is, if that's where the volume is, and that's where the demand is, and if that's where the demand is, and there's going to be a rise in prices in that area. So if people are forgetting about the options that have 3, 6, 9 months expiration, that's an edge for us who are willing to put in the time and craft smart trades to take advantage of that. And I that's kind of the wheel. That's the sandbox that I play in.
Yeah, and I don't know about you, but for the past decade, I've been grumpy about the short dated options. Right? They introduced weekly options on the SPYs like in 2013. And I'm like, this is going to wreck the market. Right. And it's kind of like trying to call a long-term top on the markets. Every time I think that there's going to be some kind of a system-wide breakdown due to the options market, it does happen, but it's not persistent. Right. And so I know that there's some very good edges you can do in 0 DTEs. There's some very interesting analytics that you can do to trade, pin strikes and gamma squeezes and Vanna unwinds on the option board on the short dated stuff. But again, for the simple stuff works just as well too. You don't have to be an options expert. You just buy the stocks that are going up.
I find it interesting that the 0 DTE options, if you wanted to short sell, let's say an SPY call that expires today, right? I don't know about you, but my brokerage is going to require about $10,000 a margin to sell that one contract. And that may make sense for a contract if it has 3 months of expiration. But if it has 1 day to expiration, they're really making me put a hold up margin for a 100-point move in the SPY. That seems crazy.
Yeah. So I'm going to tell you the secret, and everyone listening, don't do this unless you really know what you're doing. Futures options have much better margin. So instead of trading the SPY, you can sell options on the ES. I think MES, the micros, also have an options board, and those can offer much better margin depending on the brokerage. And if you're a reasonably good day trader or a swing trader that has very key points, you can probably enhance your edge by selling those options and catching a little theta on the side too.
Dangerous game though.
Yeah. No, that is
not,
the nickels in front of steamroller
newbies.
trade. Yeah, you just got to know where the steamroller's going.
You've probably encountered these people too. I get a lot of people, also the newbies, usually coming to me saying, "Hey, man, theta's the highest right before expiration, right? So I should be selling these options with 1 or 0 days expiration." And man, I've been trying it. I've been doing good, and I've been making $50, $150 a day, whatever. And I'm like, great. Come back to me on the day you get your face ripped off, and then tell me how you feel about this.
So here's
strategy.
what you can do. You can get in your option analytics, and let's just say you sell a 30 delta put, right? And this can be 1 week out. It doesn't have to be that far. And look at the 30 delta, and then you look at the average range of whatever market you're trading. So if the S&P is moving 40 points a day and you've got a 30 delta option, right? That's what, $120. Did I do that math right? Or is it $1,200? Right? It's a $1,200 swing. Do you think you're going to be able to get enough theta to capture relative to the risk that you're taking directionally? Again, you got to have other considerations besides just saying vol is high, right? Someone in the chat was like, a lot of people sell spreads into earnings due to a juiced options chain. That's a widowmaker trade, because there are certain people that say, oh, you should sell options when the IV rank is really, really high, right? So what is that? That's biotech, that's earnings, and that's when the market's taking a giant dump, right? Those are some of the riskiest times to be selling options, and it's shown in the juice in the options market. Can you make a positive expectancy system with those? Yes, but holy shit, it's hard, right? It's a very difficult trade, right?
Yep.
So work on the simple stuff first, think about market timing first, and then you start thinking about the other Greeks alongside.
The first thought that always comes to mind when I come across somebody that wants to be a premium seller, and they subscribe to the church of premium selling, right? We know the people out there that are selling premium selling as the one go-to strategy, and I have no problem with it, right? But the one thing that always comes to mind for me is the people that want to be premium sellers, whether they're aware of it or not, is they're attracted to it because they like the high win rate. They want to feel good about winning all the time, or winning the majority of the time. And there's nothing wrong with that. And you can have a very high win rate selling premium, and you could win as high as 80, 90%, but you got to be on top of it. You can't be letting things get away from you. And sometimes you have no control over that, right? If we have an overnight gap, it's very hard to hedge overnight risk depending on what strategies you're trading. And so it's you think you're sleeping well at night because you're winning 80 or 90% of the time. But I don't know, Steve. I've been a premium seller at various times in my life, and I don't feel like I've ever slept well when I was a net premium seller.
It's not fun if you're selling iron condors into an earnings event and then they have blowout earnings, right? And then you're like, it's not just how do I escape the trade, it's do I have enough liquidity when the market opens to get out of that trade without losing my shirt just on slippage. So yeah, there's a reason why my hair has been thinning for the past few years, besides COVID and all that stress. It's because if you're selling options going into high vol events, it's just that you've got two kinds of capital. You've got the financial capital in your account, and then you've got the psychological capital. And what you'll find, especially if you're option selling, is that you will deplete your psychological capital focusing and trying to adjust and roll and do all these things to fix a broken trade. Meanwhile, everything else is running. And so you may have preserved your financial capital, but your psychological capital is now at zero. And then you're either going to trade on tilt or you're going to miss out on a lot of trades. Like I am speaking from experience here. That's just kind of how it works.
One of my greatest frustrations ever as an options trader was, and this happened to me multiple times, is when I'm short a whole bunch of iron condors, and the market is pretty centered in my structure of where I make money, right? but then the market starts rallying, slowly, nothing crazy. But volatility is coming down. So I'm like, oh, volatility is coming down. I should be making money in my iron condors. No, in fact, the opposite is happening. I'm getting slowly bled to death as the market's going higher, even though volatility's come down. Meanwhile, I'm watching all these other stocks just ripping faces, and I'm just like sitting on my hands because I'm short these iron condors that I'm managing, losing money. And I can't tell you how many times that has frustrated me, Stephen. I don't do much of that anymore because I've hit my head against the wall enough
so
times.
I think actually right now is not a terrible time to do iron condors. The indices are one animal. There's a lot of stuff popping off underneath the surface. The biggest risk with iron condors is just sustained upside drift and trend to the upside. Those call spreads that you sell are way too sensitive. Yep. Sometimes you can unbalance it. So if you sell 10 put spreads, you sell 5 call spreads. That's a way to try and mitigate some of that. Right now, I think one of the best trades, you sell vol on the indices and you just start buying vol on a lot of these names where fund managers are just blowing into these stocks to play catch up. I think that is the summer trade. So as much we're taking we're taking a crap on iron condors, it's not a terrible trade. But again, you get that 0.5% rally, and you're like, okay, that sucks, and it keeps 0.5%. All of a sudden, it's testing your short strike on the call side, and you're like, well, what do I do now? The best defense against a nuclear bomb is not to be there when it goes off. So if you are a net seller of options, you need to think about how to manage your trade. Can you manage your deltas? Can you buy some extra wings? Do you want to balance it by going long vol on single stocks and looking for that upside drift? You can't just say, oh, the market looks range bound and this looks like it has a pretty good hit rate, so I'm just going to play it.
All right. The short answer to anyone interested in getting into options premium strategies, selling iron condor strangles, is that these are not set it and forget it trades. Okay. You don't just put it on and then wait until it hits your profit target and get out. There is active management involved. If you want to be in this game for a long time, you need to get comfortable with active management. There's no way around it.
And there was a golden age.
Unless you're just, willing to take that risk.
Back in 2014. I don't know if you remember that, but it was before the Chinese currency crisis where, Janet Yellen coughed and then the market sold off another 100 handles. The S&P traded between a range of 2030 and 21, or let's just say 2130, about 100-point range for like 9 months. And it was a set and forget trade. And then it wasn't, right? And then you get smoked. And
I do remember that. Was it the October Chinese bear market?
Yeah, it was August 2015. There was a surprise overnight currency adjustment from China. That was a funny one. I have something called the Chinese buffet trade, where if the market is sold off enough and I'm stressed out enough, I will go find a Chinese buffet and stuff my fat face. And I shit you not, it is marked the bottom of the market every single time except maybe twice since 2009. That's how long I've been running that trade. So I would, I'd get on Twitter and say the Chinese food bottom is in, and then we're up 5% in 3 days. So that's, you can kind of use a little mental feedback loop, I guess. And I try not to do that anymore because I do get fat.
Well, I like to say that I marked the bottom of the great financial crisis because I opened up my Twitter account literally at the bottom. March of 2009.
I bought a single serve website. The website is called isthisthebottom.com. And if you look at the domain registration, it's like March of 2009. Like it was perfect timing. I still bust that one out every once in a while. It's a fun little joke site too.
Yep. Well, Strazza, let's bring it back in here, man. The market just opened. Speaking of bombs going off, I've got alarms going off left and right about stocks hitting levels.
If you're just watching the indices, you're missing out on everything else. I run a scan. I actually put my scans into AI now because the qualitative data is pretty good, so you can group it in. And the breadth underneath the surface right now is pretty fantastic. Not just the tech stuff. Commodities are running, LNG exports are running. Biotech? I think biotech's about to rip now. just because we saw some capital moves. Like
Biotech.
there were a lot of biotech stocks that were up 10% on the week last week, and that was something that we haven't seen in a while. So that might start popping off too.
It's got a lot of room to get back to highs, so
Yeah.
I like it. I like it. All right, well, guys, I don't know what the plan is here now that the bell ring. I don't know if Strazza is coming
Well,
back.
I gave
or
Alfonso
what,
some
or
charts
I'm
if you want to
supposed
just keep
shut this
talking
down.
about the charts real quick.
Oh, Fonzie, do you have those charts?
All right.
We'll see. Oh, here we go.
EE.
EE.
If you
What are
look
you
at
seeing
Trump's
here?
trade war and tariff thing, it wasn't tariffs, it was a function of exports, right? And one of the ways that countries can fix this is by accepting more energy from the United States. So South Korea is now accepting oil from LNG terminals in Alaska. So EE does LNG exports. And so this is an energy stock, believe it or not, that has seen strong momentum and has gone about what is that, like 2 months, 3 months of a nice little consolidation, and it's probably going to rip again. So that trade's good. I think the stocks LNG and GLNG in that bucket also work really well as traders, but it is it's a surprising amount of runners in that particular energy space. Another area that I'm talking my book right here. This is on the other side. Offshore oil drillers got incredibly oversold. We don't have a chart for that, but Noble Energy and Valaris and even Transocean all got absolutely murdered, and they're starting to bounce again. So if you like dividend stocks, that's a pretty good trade.
Ooh, we don't hear a lot about dividend stocks.
I don't know if Double E has a dividend, but well, you can throw that one on BBIO. So one really interesting
this is a bio
setup
play
in
right
biotech
here.
is you don't buy the drug, you buy the platform. And so there are now companies like BBIO is doing something like almost like a Berkshire conglomerate biotech thing where they have a drug discovery platform and then they spin out a bunch of companies. This is a weekly chart. I think it looks ready to rip. RX is another one that looks really good for that kind of platform play as well. And you could probably take a look at ARC-G, which is another ARC fund, but it's going to be more like biotech and genomics and stuff like that.
That's the genomic revolution ETF.
And I think that's about to turn.
Strazza just chimed in the chat that there's another one here. RX Recursion Pharmaceuticals has.
I've done a deep dive because I don't just look at charts. I look at narrative. I don't look at fundamentals. I look at narrative. I don't look at earnings. I look at catalysts. That's just how I think about the market. And both of those have very compelling narratives that will most likely induce institutions to buy those stocks because of how good the story is, and price actions starting to reflect that as well in these names.
Do we have any more charts there, Steve?
We are, yeah. You guys know.
Oh, I like this one.
ASTS,
I'm in this one too.
I actually bet on a range a couple months ago because there were way too many traders that were bulled up on this one trying to buy calls. Implied volatility ended up in the triple digits even after a pullback. So covered calls were the name of the game there. You kind of want a frustrative process to happen when you're trading options where you get a lot of people that are bulled up. They're buying a bunch of calls. They're so happy. And then all of their options need to get wiped out. And then the stock moves, right? That's one of the reasons the market can't sell off right now, because every one of their mothers got hedges on. Those hedges have to burn out before we get some kind of a pull, right? So yeah, ASTS and the space trade. I've been bullish on Planet Labs. That one just had earnings. Planet Labs is and satellite companies. They cost a lot of money to put satellites in space. Once the satellites are in space, they can still charge the same amount, but then they start spinning out cash flow. And so Planet Labs went positive cash flow this past quarter and had a monster gap. So that one looks good. And I think I got one more in here. Yeah. So
Fonzie got another one to throw up there.
Majestic. So There was a silver play that I looked at that had a lot of insiders buying called Gatos Silver, and they're a silver mine in Chihuahua, Mexico. They actually got bought by Majestic, and so therefore, I got exposure there, or at least an interest, let's say. And silver's starting to run finally. This one had a nice little weekly pivot move to these recent levels, and if it does manage to break out, every once in a while, silver goes on those degen runs. Trade it, don't date it. I'm not expecting this. I'm fundamentally bearish on miners of gold and silver, just because sometimes their leadership sucks, their capital allocation sucks. If inflation is high and energy costs are high, then the margins aren't there. But right now, precious metals are ripping, energy is low, and so they'll probably for the next few quarters have some really good earnings reports, and this thing starts to push.
Well, I'm loving this move in silver. I've been short a version of a pairs trade. I'm not short, excuse me. I've been in a version of a pairs trade for the last couple of months here, where I've been short gold and long silver. And just in the last couple of weeks, it's finally starting to work for me, and it's working well. So I'm happy to see these silver plays really starting to catch up. I mean, that's the bet. The bet I was making was that silver was going to catch up to gold more than gold was going to come down to silver.
And it's one of those, you just have to think about what these prices are denominated in. Right. So it's priced in dollars, and it's not just a bullish bet on silver. It's also a hedge against the dollar. Even though it's not explicitly said, the Trump administration does want the dollar to go lower. They want a weaker dollar. They don't want these countries hoarding dollars due to trade imbalances. And so that's kind of unwinding as well. And everyone's kind of still spooked about inflation. So that helps. Yeah. Silver's starting to run.
Yeah. All right. I believe that's the end of your charts, right, Steve? Yep. All right. Well, hey, you and I get the pleasure this week of wrapping up the morning show. We're doing everything differently this week. Spencer, I don't know if you heard, but Spencer had a baby last week. Well, his wife.
I'm sure he worked really hard on that too.
Steve's here.
Congratulations.
Well, we all got to see the pictures. We're all very happy for Spencer. I'm actually going to see Spencer later this week, so I'm very excited to give him a hug. And he's in right here. I'm sure he's watching right now. Spencer, you take care of stuff, man. This is the golden time right now.
Steve.
Enjoy it.
Hey, what's up, man?
Well,
Strazza, you going to bring us home?
Thanks so much, Steve, for coming on, chatting options. Always so generous with his time. What a pleasure it was just having you in the room at Portfolio Accelerator a few weeks ago.
It was a lot of fun.
Really awesome. One of the fan favorites. Chat loves you. Yeah. All right, so we'll just sign off right there, guys. It's a Monday, so not much going on the channel. We will be back tomorrow, as always, 8:30 Eastern time, right here with the morning show. Adios, everybody.
Later.
See you, everybody.
I can't take no loss. I don't even know what it costs.